That's a setup as we see it. Richard Harris is now joining us. He's Executive Director at Port Shelter Investment Management. Richard, good to have you with us here. Thanks very much for your time. What's happening in India is happening. We're about 7-8% off the highs on the Nifty. But in the US, do you think with Trump ahead, at least as far as betting markets are concerned, that provides some kind of a support to the US? Because that's also a market which to many is very concentrated, very overheated, has done very well. But despite all of that, does Trump in the White House, potentially Trump in the White House, provide support?
I'm not so sure it does. You know, there are a lot of comments about these are Trump stocks and these are going to do well. But let's not forget that the stock market's done extremely well under Biden. And the issue with Trump is that he's very mercurial. We don't really know what he's going to do. He changes his mind every 5 minutes about things, depending who last talked to him. So it's very difficult to predict. I'm not one of these who thinks that one candidate or the other is going to be better or worse for the economy. Long term, I think Trump will be much worse because of the issues regarding inflation and immigration, which are very inflationary. But in the short term, I don't think it's very easy to say that one or the other is going to do better. What we do know is that the election is having quite a big impact, I think, on the markets where people don't really want to do very much. And when people don't really want to do very much, then the air tends to come out of the market.
Richard, hi, morning. Great to have you on the show today. The other interesting facet is this rise in yields, right? I mean, look at what the 10-year is indicating. It's definitely saying something at now 4.25%. What do you think is propelling this move in bonds? Is it the sense that maybe the Fed will not be that aggressive in rate cuts, or is it something else?
Yes, again, I think it's all a bit of a delayed reaction. You know, I think the market, don't forget that we went from the market expecting 4 or 5, maybe even 6 25 basis point cuts this year. And we've had one jumbo cut at 50 basis points, and the Fed's basically saying, right, we're going to stick there. So I think the market, on the one hand, has done very well in terms that it wasn't massively disappointed by the first. But now I think reality is setting in, and that it's looking at the economy still reasonably strong, that rates are likely to stay where they are, or maybe be very small cuts. And I think that what we're seeing now with the Treasury move and the dollar move is really people coming back into line with what maybe they've been previously. So I think we're really following on from news we've had before, rather than it telling us anything specific or anything real. If there is something you can get out of it, and I think that links with the rise in the gold price too, is that I suspect that with the rise in the long end and the rise in gold too, that there's a little bit of an inkling out there that inflation isn't beaten, that we may be at a bit of a low at the moment, and we may actually see it move ahead. And if that happens, then 2025 could be a very different year.
Hi, Richard. Morning, and good to see you in. You have been quite positive on the Indian markets. And now we're down close to around 6.5–7% from the recent peak. What's your take on the Indian markets? Is this a good entry opportunity for someone like you has been calling a structural bull market here in the Indian markets? Well,
I think we've got to see what's happening in the rest of the world. You know, India's been very good because the rest of the world has been very underpinning. The economy's been strong. And let's face it, if you look at the IMF growth figures that came out yesterday, day before, we're looking at India still being the standout market in terms of GDP growth and size of population. You know, and that's a big impact, I think, on world growth if you put those together. So I think that the growth is there, but it's going to be difficult, I think, for India to buck the trend if the rest of the world is maybe holding back a bit. What we've had, if you look at this year, we didn't think much of this year, but we had a big AI rally. We've had a big turnaround in what we think about the consumer, big turnarounds about the fact that actually there has been some growth in Europe and in the US as well. All of these have been positive events. At the moment, we don't really have a positive event out there. And we do have the US election hanging over us. So I think it's not surprising that markets are going to languish at the moment, and India is no exception.
Okay, all right, Richard, we'll leave it there. Good conversation as always. Thank you very much for joining us here on CNBC TV18. Guys, the big reason why the markets dropped is, of course, FII selling, right? $10 billion plus has gone out. Mutual funds have bought $10 billion.
Yeah.
Actually, it's very, it's stark. 90,000 crores buy, 90,000 crores sell, right?
Yeah.
If you see. If you remember, we were talking about if this money's gone to China, I remember somebody saying that the readjustment will take about $10 billion. It's about the readjustment from India to China is about $10 to $12 billion. I think about 10, 11 has already happened. So actually, can we do it mathematically? I don't know, sitting here. But I don't think anyone can do it. But I think broadly you can, if those numbers are correct, we'll have to go back and see. Because the question people are asking is this it? 10 is done, 11 has gone out. Is there more coming? Will we see another week like this? And I think to that sense, my sense is maybe mostly it is done. We'll have to see this readjustment that we're talking about. FI is on about $800 billion here. It's not as if they're going to move 800 billion to China, right? Yeah. So it's just 1-2% of the MSCI emerging market universe.
Yeah.
And that percentage going from 27 to say 25, 24, that's worth this $10-12 billion.
But
bulk of it has happened. That's the limited point. India to China, if you find valuations in India expensive when you want to sell, that's a different point.
Yeah.
But this readjustment, I think, is largely maybe done.
And